All right, everyone, welcome back. Water Wednesday, October 11th. Well, actually, do we all have water? I have water.
I
Yeah, you
got
got water.
sparkling water into water.
There we go. Sparkling Water Wednesday. So welcome back, guys. If you were here this morning, saw some live trading. Me playing around with HGraph, and the boys playing with AIFF. We're back. And so we'll do the usual, some Q&A, some questions, some conversations, talk about literally anything. We can talk about oil spiking, and then I dodged a bullet covering. But yeah, anyways. The boys look
Good
tired.
morning.
Huddy looks tired.
Boys are tired.
Yeah,
Boys are tired.
boys are tired. It's been a
Boys have
busy...
been waking up early.
It's been busy. Busy week, busy month. Did I say... Matt says it's not October, Kyle. Did I say October?
Maybe.
At any point?
I
don't
wouldn't.
know.
I didn't hear.
Maybe I'm tired. Don't know what I'm talking
I zoned
what I'm
out
saying.
when you started talking.
Yeah. The stream started and I haven't listened since. But yeah.
Honey's camera is like completely zoomed in on his face.
I hate that.
How did that's a new feature for Huddy.
You said it was October 11th.
October 11th. Oh, whoops. Whoopsie.
Classic mix-up, right?
Yeah. My 5-month difference. Sorry, everyone. March 11th. But right on. All right, throwing your questions. We literally before the stream even started, Skater Hub throwing it out there from the beginning, getting his question in early. What do you guys think is the easiest pattern to learn is, and what are the ones that you need the most / least, the most and or least discretion? That's a good one to start it off. The easiest pattern to learn.
I think they're all easy to learn,
Yeah,
right? I mean, if you're just trying to figure out what is a first red day, what is a breakout, what is a reversal, what is a pre-market high break, like what is a breakdown. Like I feel like learning them is the easy thing. Being profitable at them is kind of the hard thing. I mean, your most discretion. One of the ones that need the most discretion, I would feel like, are your day ones stuff where you are buying stuff that is relatively fresh news in the past few hours or in pre-market. Daily charts that are dead and gone, and then all of a sudden the most volatile stocks in the market overnight. So doing anything long or short on day one, minus like gap and craps, I think, and anything scalpy, I think is full of discretion. Which type of daily charts do I trade? What is a big move for me? How tight do I risk? Anything that is buying dips, selling strength, or shorting spikes and covering weakness. Any of that day to day, the true day trading stuff, I feel like is the most discretion. And then anything that is more, big picture daily chart oriented, your breakouts, your first red days, your reversals, your gap and craps. Those are going to be probably the least discretion in terms of what quantifies a pattern and what is the idea behind it.
I like that. I was going to I don't know if this is a cliche answer, but I was going to say with the easiest pattern is the one you best understand.
Mm-hmm.
Because everyone is different. Back to what kind of to feed off what Dom said is like anyone can learn a pattern or at least recognize it, right? Like, and Huddy always says, it's like an IQ test. Like just you know what a circle looks like, you know what a square looks like, you know what a triangle looks like. Eventually you can learn what specific daily charts will look similar or comparable and or offer some kind of setup or pattern that repeats itself. I think that's probably the easiest part of trading. But then going beyond that, like Dom said, being profitable with it is then understanding it at a deep level how to handle it, in the markets and within yourself. Like I'm a short buy trader because that I get that. I understand that more than longing. Now, it doesn't mean I don't make money on the long side, but that's only because I've been around for 10 plus years. Like I know where I fit in when it comes to longs, but the majority of the time it doesn't exist. Like I'm a very, to your second question, I'm very discretionary as to when I like a long or not, only because it's when I understand it best. I understand a very maybe specific contextual point with any one given chart or trade as to why I like it, over another, one breakout over the other last 10 that I've passed on, right? But least discretionary. I mean, for me, the least discretionary is gap and craps. But even then, I'm kind of retired, semi-retired from those. Even though I probably shouldn't be, but I am. But I mean, least discretionary. There's tons. I mean, you can slap an algo on almost anything to some degree. Just whether it's whether that's what's comfortable or you best understand it for you. Like I've met quant traders who are just uncomfortable to the highest uncomfortability you can get when it comes to being discretionary. Therefore, their only option is to take a quant or code-based route and be anything but discretionary, right? So it's fitting in where you're most comfortable and where your learning curve takes you, so to speak. I don't know if you have anything to add there, Huddie, but that's my take.
Just hit the like button.
Hit the like button.
I want everyone to hit the like button.
Well, also a question for you, Huddie. You, in the last, I would argue, 2 years, although very discretionary, have welcomed in the non-discretionary with open arms to some degree. Like you're still pressing the buttons, but you have brought on like a quant level of data that you only want to then take human decisions off of. Would you agree there? Does that change? What do you think changed that for you? Year 8, year 9 in to now.
I just don't like sitting in uncertainty. And I found a way to find certainty. I found a way to know that if I do something, no matter what, the answer is right. I feel like so many times in my career, the answer is always there's no right or wrong answer, right? And I think what shifted is that I think there is a right answer. And I want to do that answer every time, almost like a perfectionist. It just makes me trade from a more comfortable spot, like things make sense. Otherwise, I just feel like I'm gambling on penny stocks, and I hate that feeling.
Right. All right. Very nice. All right. Everything. Good afternoon. Where's everyone tuning in from? Wayne, are you in Japan? Crazy. Eric's in Oregon. If you are in Japan, Wayne, that's insane. But kudos. What time is it? It's got to be or is it the morning time in Japan? Is that why? I'm thinking it's the middle of the night.
Tomorrow.
Yeah, it is Thursday, Japan time. Yeah, 8:12 a.m. Well, welcome. Good morning, Wayne. Very cool. Yes, Huddie's mic is plugged in. And Eric was quick to it, 8 a.m. Yep. Guys, how did your trading day go? So my day started off on a small loser on HGraph, which actually was kind of annoying because after we ended the stream, it actually did end up going lower. But it's not a big deal. There was no way I was going to make a big gain out of it just from the technical difficulties that were the OTC market for practically everyone. 99% of people I heard from could not short or did not short HGraph as well. But then in after hours, actually very close before we started the stream, actually an hour ago, I decided to cover up my last oil small cap short, locking in some gains there. So technically I'm green on the day now. That's how my day went. Although I don't know, were there any good breakouts? I mean, what, CAT or SafeX? Is that what it is called?
Yeah, it's on its way.
Yeah, that's working right for breakouts out there.
That working more than AIFF worked.
Yeah. Did you take that one, Arm, or no?
No.
No.
So it's just me, hey?
So just Huddie.
I was a single father today.
Nice. Paul says Huddie looks like he already started Wine Wednesday early.
I was taking a nap right before this.
Yeah, so he's sleep wasted.
Was it a structured nap or was it an accidental nap?
It was accidental. I cooked a lot of food. I'm gonna send you what I made, Dom.
All right.
I'll send it to Kyle too. And there was too much food is what happened. And then I was on the couch and I was watching a boring show and Next thing you knew, I was asleep.
There you go. Use
But look what I
that.
made. But it was too much food.
But then you naturally woke up from your nap too. That's impressive. Usually I sleep way
Yeah,
too
because I
long.
think my body kind of knew.
Yeah,
Can't let the boys down.
wasn't sleep time.
Ground beef and sweet potatoes,
There's some other stuff in there, but yeah.
cottage cheese.
An egg.
And
I
no,
hate
there's no egg.
avocados.
It's avocado
I'll never
and
forget.
hot honey.
I'll never forget that Dom doesn't like avocado.
Oh, they're so
That's
gross.
that's the exact sound I heard when I gave him a burrito for the first time, and he was like, "Oh, is there avocado in here?" I'm like, "What?"
It's such a gross
Oh.
thing.
So funny. Like driving, looking in the back seat, and Kellogg's
That
like,
was I was just telling Jenny about that.
It's so funny.
That was so bad. We were going to Palm Springs, which
Mhm.
is a long journey for me. And as I walked onto the plane, I dropped my phone and it shattered.
Ugh.
And so I barely had the frickin' QR code to get on the plane. And then I didn't have my phone the entire flight. And then I didn't know how to tell you that you were picking me up from the airport, to tell you that I was there and where I was.
Mhm.
Remember, I had to get on my computer and go to Discord.
Oh, that's right. Yeah, you called us on
Then
this.
we had to go to the Verizon store.
Oh, I forgot about that. You're right. That's funny. But yeah, back to the only details why the story brought up is because I got Kellogg, Jack, and Dom food for the ride because we were then driving up to Palm Springs, and I think I got Kellogg a burrito. He loved it, and then I got Dom I think tacos and a burrito, or just for everyone to share. And he took one bite as I'm driving, and he's like, "Oh." He's like, "There's guacamole in here." I'm like, "Oh,
I
maybe,
think the ones without it were really good.
yeah, yeah. I mean, either or, you can't go wrong with either or. But I like mine with. But now we know. No,
Now we know.
no avocados or guacamole for Dom. Raz says, is the 7 month difference? Well, it depends on what you look at it. It could be 5 months ago, and October was 5 months ago, or it could be 7 months in the future. I was
I
thinking.
can't believe you said that and I didn't hear it.
I know, I didn't even realize, but I was thinking October 2025. What are our thoughts on CITT squeeze from 50 cents to 22 bucks in under a minute? I know some longs who made near 100K on that, but did you hear any shorts that blew up? Question mark. I personally didn't. Do you guys know anyone that may have made or lost
Wasn't
money?
it like 20 seconds? How could you even have made money on the long?
I think if they were just happened to be long for some odd reason, and then you got to be quick. But yeah, if it was that quick, I mean, God, you got to be really quick on the sells, which is doable. It's not like you can't sell in under 10 seconds, but it could have been I imagine it would have been a vast difference between selling at 5 and all of a sudden it's at 10. You're like, crap, let me sell at 10. Then you're all out by 12, and then it goes to 22.
I mean, you really only would have needed like 5K shares from 50 cents.
Yeah, it really exploded quickly.
I don't even know if I'm fast enough for that. Like, I'm so slow with DOS, like, versus how I was with E-Trade. But I think who was on Good Morning NASDAQ with me that morning? I don't know. We didn't know
I think that'd be Huddie.
if that was real or not. Someone saying I saw on Twitter there was a live replay of the tape and you had enough time to realize what was going on to sell. Huh.
I think I saw that recording too. Yeah, it was quick, but it was under a minute. You could have done it. But no, I don't know anyone personally, long or short. I'm sure someone was short and blew up for sure. But it's been coming. It's scary. It's very scary. It's been becoming quite more common in the last year or two. And by common, I mean once every what? I mean, we've had 2 in the last month, have we not?
What was the other one?
I forget. What was it, Huddy? It was the day we literally talked about pre-market the night before.
Oh, with a P.
Yeah. Was it PLYZ? Was that the ticker?
Could be.
PLYZ. Let's look real quick. Or PLYX? Maybe? Let's see if that's it. I don't think it is, but it might be. Put in the chat if you guys know which we're talking about. Oh, yeah, no. It was PLYX on the middle of February. Pre-market goes from $5 to 62 or
In a minute.
65. Yeah, so that's 2 times last month. That's definitely the most common. I think before that was like 6 months to a year ago, and then before that was maybe also 6 months to a year ago, and then it's never happened prior to that, at least from in our careers. We've not seen a move that fast, that quick. We've seen like this. We've seen the same amount of moves maybe in an hour. Maybe 2 hours, but 30 seconds. That's something else, man. A little crazy. Turk says, I found some success afternoon high at day breaks on big percent gainers. I'm trying to add a new pattern. I understand the 3rd-day surge pattern. However, struggling with entering these. Any advice? So I have a problem with this supposedly Don laughs because he's heard me say this 10 million times. I have an issue with this supposed 3rd-day surge pattern. Not an issue, but I have a bone to pick because somehow the name caught on. I don't know who made the name. I don't know where it started, but people call it that, and there's nothing wrong with calling it that. I'm being a stickler, but to me, it's a breakout, guys. It's a breakout. The stock ran, it set the high, and then 2 days later, it breaks that high. That to me is a breakout. It doesn't matter if it happens on day 3, day 5, day 10, day 15, day 37. If it made a significant high and then breaks over that high, technically that's a world where on a certain time frame, whether again day 3 or day 30, it is a breakout. So how would you play? How would you suggest any advice playing those? Get good at playing breakouts, because that's literally what it is. And maybe that's why I'm trying to like subconsciously think of like, maybe that's why I don't like the pattern, because it makes it sound like it's more than it actually is. Like you're trying to figure out how to play the 3rd-day surge pattern better. Breakout, buy a breakout, buy when it breaks out, risk low of day, and see how it goes. See how it works. Like that's it's really simple. Doesn't mean it's necessarily easy, but it could be that simple. So I don't know if you guys have anything to add to that, but
I don't know if Huddie has data on afternoon high daybreak, but I know Gratani had an algo that ran it like years ago, and I don't know if he runs it anymore.
I think he still likes it.
Sweet. I can see those working really well on OTCs. That was a pretty good one. Like HGraph was one, right? HGraph was kind of slow.
Would have been probably.
On the actual breakout day, it was like slow, and then late day, it ramped like 10, 20 cents. It would have been a great ad. Because the next day it goes $1 share for you.
Not my style of entry.
Yeah. Dom likes getting early, which I don't blame him. Sly says AIFF wasn't ideal from the volume. I took it as well with small size, but isn't taking non-ideal plays a slippery slope.
It's slippery.
Any thoughts there, Huddie? Well, Huddie, I think I know Huddie's answer.
I just want to know what the question is. I don't know how to respond if it's not a question.
No, he's asking, isn't taking non-ideal plays a slippery slope? Question mark.
Yeah, but I thought it was pretty ideal. I took it. I guess the difference of an opinion, right? Like a lot of times, like a lot of the breakouts that I bought lately that I've been successful on, when they start to break out, there isn't a lot of volume. And then that, like, as they go higher, the volume accumulates and comes in, and then by the end of the day, it's a big shish kebab. So there's always some type of unknown of whether the volume's going to come in or not. Yeah, maybe AIFF was like more liquid than most, but like this is the exact way that EDSA is set up. Way back when I remember buying it had very similar volume, and then like by the end of the day, when it works and doesn't like crap out of the gate, and you have sustained interest throughout the whole day, the volume looks way different. So I guess my point is it's like hard to judge in the moment what is weak and what is good volume. I don't have a way of doing it. I don't have a way of discerning it. That's not what makes a play unideal for me.
Yeah, so it's kind of like I think both are right, but they're also not necessarily in relation to each other. If your pattern that you trade says that there's a volume requirement, like reversals, I think for Cortani are like 7 million in dollar volume the day before a potential reversal. If you're losing a bunch on reversals and you're not abiding by that criteria, then yes, I think that is a slippery slope. Um, and I agree, taking non-ideal plays is a slippery slope, but that is going to have to be decided by you. I think of it's just like does it fit criteria or not? And if you need to adapt that over time because it's just not working, that's one thing. But so I kind of agree with both sides of the coin to some degree. Um, you just don't want to be breaking rules. Make your rules and follow them.
Yeah. Yeah, my answer was going to be very similar to Dom's at the end there, which is like, yes, it's a slippery slope, but only up to a certain point. Like you either have a setup in front of you or you don't. So it's like how many things do you need to not make a setup look good to have it go from non-ideal to just non-existent to some degree, right? And when you're new, you don't really have the experience to be able to play that game of like, oh, it's ideal. Because again, I know people hear me all the time talk about grading something like A plus, A, B, C, whatever. But again, guys, I didn't do that till year 4, year 5 in. Because all the first 4 years was me not knowing what I didn't know. And I don't necessarily know where Sly's at on his journey, but I think a lot of beginners don't have the privilege or haven't earned the privilege yet to call something unideal or non-ideal because they don't know, and maybe that's why it's a slippery slope, because you may think one thing, you may think a setup is terrible, and then it's actually really good, and you might think a setup is bad, and it's even worse than it's bad. It's not a setup at all. So it's like that's where the slippery slope is that are you able to look at a pattern objectively, or is your thoughts, emotions, feelings, get in the way of what actually is in front of you, right? I hear it all the time too, where it's like someone might try to grade something, and because it's a B grade, but it's the only setup they've seen in 4 weeks, they now get super excited, so then they give it A size risk, But it's like that's not objective. That's you playing with your own mind, changing how you should be treating something just because of the situation you're dealing with, not what the situation the market's dealing with. The market doesn't care that you haven't taken a good trade in 4 weeks, but if a setup shows up, it's still a B, regardless how you feel about it, But again, that's where the slippery slope I think comes in, which is like people's opinions getting in the way of maybe the objectivity behind it all. All right, so Israel, Jersey Shore, Liverpool, nice, Baltimore. Very cool guys all over the place. Eric's knocking down Saki on one Wednesday. Hell yeah. Saki's fun. I'm a Saki fan. Do you guys take every breakout chart? Is there a limit to how far the breakout level is? Wait, a stock can open and still be profitable. What do you have to see in order to take a breakout, question mark? And can you walk through and scaling in them? A lot of questions there, but I'll leave it up to Dom or Huddy. You guys are the better breakout buyers, in my opinion. But
I'm new here.
Huddy's new. Dom,
What do I know?
any thoughts on these questions?
Well, I'll just answer it as if I am Huddy. I can answer anything for anyone. Yes, take every breakout chart as long as it fits. And I don't. This is where there's always a lot of talk about like grading setups. Like the answer, if you're whatever pattern you trade, should be yes. Do you take every breakout chart? If my criteria is correct in what I want for a breakout or a first red day or a reversal or whatever, like statistically, why would you ever not want to take as many of them as possible if you know it's a positive P&L curve? So the answer is probably no, because I miss things, but I want it to be as close to yes as possible. I don't quite know is there a limit to how far from the breakout level a stock can open and still be profitable. Huddy would not buy anything that opens over the breakout level. And the limit, I don't have a number for you, but I would really prefer the stock to break out in regular market hours. I'll leave it at that. It becomes very tricky when the gap is over the breakout level, or even if it's such a big gap up into the breakout level, it's just you're dealing with so much more resistance than you normally are on just a traditional consolidation into a breakout. So I don't have a number for you, but you got to think about, and we had a discussion like this in the room today about a lot of people wanting to buy DXST today, like above 50. And it's like, if I'm at the point where I would be happy selling something, like, and this is how I kind of look at reversals too. If I'm looking to buy a reversal on something and it closed yesterday at $1 and it's gapping up to 135, like I would be thrilled to sell at 135 if I bought it at $1. So I don't really want to be buying in places that I want to be selling. And if you gap, the more you gap up, you have to think anyone who's already in is licking their chops to sell. I don't really want to be buying into that selling. So I would prefer a breakout in regular market hours. What do you have to see in order to take a breakout? I need to see criteria being met. I need to be there to be an increase in volume relative to the rest of the daily chart. I need to see volatility. So stocks increased range relative to the rest of the daily chart. And it has to fit the pattern where stock tops out after a run, has at least one day where it doesn't break that high, and then breaks out. And then, Huddie doesn't really need anything past that. I would prefer a good risk reward. I prefer consolidation before breakouts versus the ones that kind of spike all day into it. Something like a SafeX today is kind of more tricky, I think. And then scaling into them, that's going to be to each their own. There is different entry styles, getting in early off of morning ranges or off previous lower highs to the breakout level, adding at each level higher, adding into the breakout level. There's people that just buy the breakout level, risk wide, people that just buy the breakout level and risk tight. I tend to try to keep risk the same as long as possible and then move it when I want to add. And I only add when I move risk. So that way I am playing a positive skew of getting more when I move my risk. So that way I make more the higher it goes, but also that way, I'm not adding risk to when I'm happy to give up unrealized to get more size, but I don't want to add and increase my R loss until I have a new risk. So as the play develops, move risk to key levels on the chart.
There you go. Nice. Yeah, Matt says he saw some guy make 22K off 2,000 shares at 52 cents. Yeah, crazy move.
That'd be an amazing Christmas. I feel like that would be so bad for a lot of traders to just get stuck in something like that, because you would be sitting there pre-market every day. It's like hitting a jackpot on a slot machine.
Yeah.
Like every time you hit it now, you're just like, when's that one coming? When's it coming? Like,
yeah, a little too hooked after that kind of a win for sure. And then Matt Friend says, who is buying up there? Yeah, it's could be shorts covering, but you got to also think about the fact that people who are currently seeing CITT or CIIT in that exact moments, like that very minute, are probably remembering PLYX go to $60. And so I guarantee you, as much as there was shorts covering, there almost was probably just as many, if not maybe, some amount of longs that were buying at 22 because they thought it was going to 60. You know what I mean? There's always someone who's going to be willing to chase. However, I do think it was probably more shorts than longs to some. I would guess, but again, we'll never know. But I would not be certain enough to say, oh, it was only shorts. Like, no, there 100% was a long who said, oh, 10, 15, 20, oh, it's going to 60, buy, puts in the top, I'm can't be fully confident, but you would not be shocked. That's also someone who lost money doing so. Eric says, looking back at SafeX, Huddie says, why is he still in? Eric, you were long 42 cents and a stop at 41 cents, and I'd still be in. Damn. I think Huddie's still in because it broke out and it held. Right? Am I not mistaken?
Yeah.
We're talking about it in the room. I think he's saying he's just reviewing.
Okay.
And looking at Huddie and why he's still in.
Got it. Yeah. Breakout's holding. And it's, I guess it's technically gapping. overnight. Nice. Let's hope that goes higher the better, man. I would love another like QNCX. I love the I don't know why. I love the ones that start under $1 and end up like $1, $2, $3 a share. I think those are the funnest. Very rare.
Can I tell you what I would love?
What would you love?
I would love 85.
85. We'll take 85.
Anything above that, I'd be happy.
All right. So 84.5. You're not happy.
Not happy. Selling, but not happy.
All right, fair. We'll take it. J-Bone says I blame Bryce Toohey. I don't know what he blames him for.
I think so.
But I agree.
I think it is.
Let's see. A couple of questions. I'm gonna lose my thought. Question about Huddie and Gabacrap. Same approach. Nothing has changed for him. When in a drawdown, how do you view the approach of trading less? I thought I was about to say a trading loss. No, trading less. Being more selective and sticking to bread and butter setups, or versus adapting? Question mark.
That is adapting.
Yeah, that would be. That would be a form of adaptation.
I think people get the idea that like the market changes and you need to like 180 your system. Like, oh, I'm a short seller, but I'm done shorting today. The market feels different. I'm long in day ones. Oh, market feels different. I short every day one and I'm shorting parabolics. Like that is I mean, I feel like if you did what you said there and you did it every single day forever, you would never have to adapt. I feel like you would probably just have good enough results to where you'd be pretty consistent and happy. I mean, that's kind of, I think, all of our goal, right? Trade less, be selective, and stick to your bread and butter. I think that's the most simplistic way to do it. And then I think there's nothing wrong with being more aggressive and trade off your gut feels when the market's there for you and you have a good read on it. But I don't think you should be changing the game all over the place just because the market cycles change, which they do every week. This week's different than last week. Last week's different than the week before.
Yep. The margin of error for trading is so small, right? Like you can make one simple mistake and have a vastly different outcome for most trades. And so when I read adapting as a question, right, I think people go to what Don was kind of saying, which is like you start doing too much, you got to try to change a lot. When in reality, it could be, because the margin of error is so small, it could be a small margin of error change, like just a needle in one different direction, and you can vastly change the direction of your trading. And that goes for all areas, whether you're in a drawdown or you're just unprofitable and are trying to find profitability. It could be very small changes that make a difference. But yeah, being selective is one. Sizing down is another big one. I would also argue this is harder to do, but being able to read the market environment you're in, and I only say that because I think February into March was a massive difference. Massive. And I felt it pretty early on. After like the first day or two into March, I was like, oh, this is different. I mean, just from the win rate. I mean, just from the plays that were popping up. It's like when you're around so long, you start to see things a little bit like it's like imagine reading a book once, but then reading it 10 times. You know, you start to get the story a little bit better than you ever could or would. And so I don't know if anyone's going to know what I'm talking about, but it's like if you can reflect on your February and then reflect on it now, for me, it's a night and day difference. Like win rate, opportunity of plays, idealness of plays, amount of money that's flowing into my account versus losing it. Like it's vastly different. And so that would be a way where drawdown or not, in terms of sizing down or not, like you should be able to eventually, I think the goal would be to feel that shift happen in real time, whether from risk off to risk on or risk on to risk off, right? I think that's a very, good skill to have. And it's not like you have to be perfect. It's not almost not like a skill. It's like, it is a skill, but it's like a subconscious read, if you will. But it's a good one if you have it. Eric says, who's a better trader, Matt or Dom? Oh, how do you says Matt?
What does it really say?
What do you mean? What does it say?
It says Dominique.
Oh, Dominique. It does say Dominique. I just read Dom because I knew what he meant.
He can have it. I don't care. I don't have an ego anymore. Trading has destroyed my pride.
It's like, I don't care who really is or not. I'm just here doing my thing. Paul says, do you think pure systematic short selling edge is an ever decreasing quality or quantity from year to year, and more discretion adaptation will be needed to play this game in the long term? What a question. And I've seen people talk about this on X. I don't know if I'm qualified to speak on it because I'm not a quantitative systematic short seller. But I will say even the quantitative systematic areas of the market that I know are traded, like let's say Huddie with gap and craps, I don't know, man. I'm gonna have a hard time thinking every year it gets worse. It could. I'm not saying it can't. But to if I were to look at the last 3 years, let's say, I haven't noticed a decrease. I haven't noticed a vastly harder market per se. Last year, I mean, again, maybe because I'm not systematically short selling, but again, last year was my best year ever, and I primarily short sell. So, again, I can't fully speak on the systematic side, but from the discretionary side, I arguably should be saying I'm doing better than ever. Now I am coming off one of the bigger drawdowns of my career, but that's not necessarily because of the edge. It's because of me doing stupid shit, like shorting silver, which is not my edge. So curious what you think, Huddy, because you're more in the systematic realm of things, but I would lean against that thought. I think things are just as much as they've been. And last thing I'll say is, even if it gets harder, like edges may go away, but edges also change. So like one edge will go away and another one might appear. Right. So I wouldn't be so doom and gloom like a lot of people are on Twitter personally. You don't want to be, the opposite. You don't want to be just optimistic. Like, oh, my edge is going to be here forever. Yeah. You don't want to do that either. But I would try to find somewhere in the middle. I wouldn't be on either extreme personally.
Yeah. Everyone's a little bit scared of AI, uncovering the simplest of edges and ruining them because like now, like what used to be part of having an edge is being able to do data work, which separates you from the 90% who just show up and gamble every day. And like more people have like entrance to that world just with using AI. You don't need to know how to code. You don't really know how to do statistics. Like all of it can do it for you. So it kind of levels the playing field, and like they're worried that just like the simplest of edges are going to be like found out and abused by AI. And that might be true. Gap and craps are pretty easy. But I don't know how it's all going to form or shake out. That's just the fear.
Yeah. True. No one truly knows. We'll find out as time goes on. When you do a weekly or monthly review, how do you avoid going on a rabbit holes and being efficient with your time? How do you avoid going on rabbit holes? I'm curious what you mean because I don't know if I've experienced what you're referring to. Like when I review, I can only review so long before I've reviewed enough. So maybe if you can explain a rabbit hole, or maybe you guys have experienced this, but I don't know what rabbit hole.
I'm guessing what they're meaning is like being obsessed with like gross loss and then being obsessed with like average winner and then looking at, all these trades were $2 and I lost in all of them this month. And like, I'm guessing making like a bunch of drastic changes based off of one sheet of data. Mm-hmm. I think if there was a time to go down a rabbit hole, it would be during my weekly, monthly review, but you don't want to go into like a new week or a new month so confused by your own data that you don't know what to do. You kind of want to leave it with a game plan, which is why, in my monthly reviews, I kind of talk about what I think the most important things are in relation to the month we just had, right? Like November and December, there wasn't a whole lot to go, like, win rate and all that stuff didn't matter as much because I took like 10 trades. And so there wasn't a bunch of emphasis on certain stats. the most important stats was like big winners or, the trades that did work and making sure that I realized good gain versus my average loss. I feel like you just have to, I mean, once you do it a few times, you just kind of know where your kinks in your armor are and where the bad stats are and what you're trying to, and how you need to try to improve them through different rules and different execution styles. But you just want to make sure when you're done, you have a direction you're trying to go. You don't want to be more confused when you're done tracking than you are when you started.
I like that.
Hmm.
Any thoughts, Huddie, or no?
No.
No.
On what? What's the question?
Have you ever gotten like a rabbit hole of tracking too much or reviewing too much?
No, I barely review.
There you go. Usually for me, like if I've
How
gone
do you
down,
get stuck in rabbit holes on back testing?
Yeah, it's a different thing. Yeah.
Yeah.
I get in rabbit. Yeah. Wow. In Thailand, did I go down a rabbit hole when I had like 9 hours till market open? I spent like 9 hours creating data sheets and going down rabbit holes.
Dang.
But I think it's paying off.
Yeah, you're doing the work. For me, yeah, any rabbit hole I went down was usually a good thing, where it's like I discovered maybe something, and then I had to dig deeper, and then I found out more about me that like helped me trade. So, when you're doing just a weekly, a monthly review on your trades, it's like, hey, good trade, bad trade, what I do right, what I do wrong, how do I keep doing what I did right, how do I stop doing what I did wrong, next trade, That's usually how my review process kind of goes. Or if you watch my monthly recaps, that's kind of like me. I don't really. I do a review in terms of stats. Like I'll look at all my stats and the gist. But then if you watch my monthly reviews, those are pretty off the rip, genuine in the sense that like I haven't really looked at a lot of those charts since I took the trade, right? So I'm like kind of reviewing live with you. So it's like each monthly recap I have, obviously I don't show all my trades because that would take forever. But again, I'm showing you the main winners and losers that had maybe the most lessons in them. And again, that takes me, the videos are 30 minutes to an hour long. So maybe any more than that, you're probably overdoing it. Kyle, in particular, do you think your trading setups ideas don't usually trade? And do you think it's coincidental that you see these different setups now? I'm not sure I don't know if I understand that question. Maybe I'm missing a word. Do you think your trading setups / ideas you don't usually trade? And do you think it's coincidentally you see these different setups now? You might have to clarify for me there. I'm not sure I know the question. I don't know the question. I don't know what the answer I would come up with to give you the answer there. So feel free to clarify.
I think it's, do you think you are trading different setups and ideas that you don't normally trade? And do you think it's just coincidentally you see these different setups now?
It's really
What's funny about that?
I don't know.
I think it's confusing.
It's worded. I mean,
do you think you're trading setups right now that you don't normally trade?
Okay.
Do you think it's just a coincidence that you see these different setups now?
No, but see,
I'm not telling you I have the answer, but it's a question.
I
see it.
The third time you reading it is why I get it, because the question infers that I'm trading setups that I don't normally trade.
Yes.
That's why it confuses me. It's like asking, hey,
and then is there some sort
that's
of
like asking me, hey Kyle, how have you?
Yeah. The input could be wrong here, but it's a well-formulated question.
It's the question is asking me like, hey Kyle, how have you liked being Chinese all your life? And I'm like, wait, what? It's like never been to China in my life, not Chinese at all. No, the setups I'm trading right now, I've practically the ones I've always been trading. I mean, you could argue, yes, the swing trading is fairly new. But I'm not even taking swing trades right now because the swing trading market sucks. I haven't taken a swing trade in at least a couple weeks now, if not taken the bulk of them in a couple of months, which has saved me a ton of money.
That's good discipline, Kyle.
I mean,
But there's some things setting up for you there.
Yeah. Oh, I mean, I'm super stoked that if this finally pulls back another 5-10%, then we're gonna have some opportunity. But yeah, like I'm up over 6 figures in March. Every single profit is a setup I've been trading for 5+ years, 10+ years, coming up on 10+.
What about the ones you don't normally trade?
Again, that's the thing. Let me look at my trades. Let me look at my trades for March. Maybe there's something new or unique there.
Also, by the way, Kyle did an entire webinar yesterday for the 4-leaf clovers. about the swing style. So this would be a great time to study that. I think most people don't like studying things that aren't relevant in the market right now, and then they become relevant, and then they miss that cycle, and then they're confused. Um, but if you kind of you caught the tail end of what Kyle was doing with the swing style stuff, um, the way to prepare for the next one would be to study it now, and I think that's probably why you did it.
Yeah.
Just to have some content out there about it, but also it's a good time to study while there's not a ton of buttons to be pushed.
Yeah, it's a great point. The great study, because I tried to make that webinar timeless, so anyone can go back and watch it 6 months, a year from now, and you get the gist of what it takes to maybe start that strategy if that was free. That's up your alley. But yeah, no, as you were saying that, Don, I'm looking at my setups. I mean, I think that's probably why I've been green, because there's maybe a total of 5 setups I've taken in March, and all of them are like my timeless plays, like the ones I'm up the most by far, or the most consistent for most of my career. Hell, HGraph was an OTC breakout that I practically got profitable on.
You could have made a killing in the last month just trading HGraph.
Yeah, like I wish I went bigger on that thing. That thing worked so well. I had such nostalgia trading it. That thing is the most timeless, classic setup I have not ever had, but like literally the top 3 is that thing right there. I wish I made way more, and I made good money. Don't get me wrong, but like, God, if I can go do it again and realized what I have in front of me right there, my goodness, that could have been one of my better breakout trades of my career. So apologies if I'm not answering your question correctly, but that's why it threw me off. I was like, wait, thank you for helping me there, Dom. I would have failed that miserably.
No problem. I'm good at English.
Let's see.
Third day surge.
A third day surge. You can argue that it's a first green day?
That's what I was going to say when you were saying that. I said, I don't think they think it's a breakout. I think they think it can be anything it wants to be.
But do we know? But then that's the thing.
My thing is, I have no problem with anyone saying it. It's when a third day surge can be anything, but not everything can be a third day surge. Just tell me what it is. If someone gives me a definition, I'll let you say it in the room. Just give me a definition. Like, that's all I'm asking. Because right now it sounds like any stock that runs on day 1, we're buying it on day 3. And I don't know. Maybe there's a break.
Yeah, a lot don't run on day 3.
I bet you SafeX is a third day surge.
What do you say, St. Patrick's Day?
No, SAFX.
Oh, that's the thing. It fits everything and anything. So I don't know.
But that's a breakout to me. That's a breakout.
When do you buy it? What's the idea?
Yeah. Because here's the thing too, and that's a great point, Tom. It's like maybe if you told me a different entry style than a breakout that fits, like if you were able to create a whole new criteria that isn't the breakout criteria, that's like, oh, a new setup. Let's call that. It's like there's the first red day, but there's different variations of the first red day. You have an overextended gap up, you have an overextended gap down, you have a late day fade, etc. Then there's maybe the umbrella of breakouts. You got a third day surge, you got a traditional breakout, you got a gap up over the breakout level. Like who knows what variations you could come up with. But then, yeah, like Dom said, like name it for you. Like if third day surge is a setup, give me the criteria for the entries, exits, and why. Like, and if it's different than a traditional breakout, then boom, perfect. You have a new setup, and we can call it the third day surge. But if you tell me, oh, you just buy over the first day's high, I'm gonna explode. That's a flipping breakout. So it just happens to be doing it on day 3. It could do it on day 17 if it wanted to. And also, then maybe I think, Chirk, we might have different definitions of what the first green day is, because the first green day, at least in my upbringing, is a stock bouncing after being well off its highs. And yes, some first green days can turn into breakouts, but like 99% of them won't. This is like a bounce after the run is practically over, and you're getting one last, day of momentum before the party goes back over and just rolls back over to where it came from, kind of thing. So, I wouldn't necessarily call it that. But then again, you might have different criteria for a first green day than I do. So, Eric says, I'm fighting to have a tight R, not reacting to key support levels, so stretching my R at times and not having wide enough range. So I think you're misusing the term R here. Would you guys agree with me on this one?
I wasn't listening perfectly. I'm sorry. I was talking to him
Well,
in the room though about it.
about our,
So if you have
yeah.
more questions
So
of what he said in the room,
right, I haven't read the room conversation, so I'll see if this is just on par with what you guys were saying. Um, R is a unit of risk in accordance to your account. Okay, there's no R in the stock, right? Because you say not reaching the key support level, as if you're like that's your R. R is a 1% of your account, 0.5% of your account, right? It's your average loss, let's say. Like a lot of times my R isn't like a percentage, but at the end of the month, if my average loss is 5K or 1,000 or 10,000, like that's my R, roughly speaking, right? So when it comes to a chart, I'm just trying to pick a risk level. And then I'm sizing in according to that risk level. So if you're fighting to have a tight risk level, then you're just risking too tight, and you need to widen your stop loss to lower levels, and your R stays the same, right? You just maybe have less size, right? Because the tighter you are to your risk level, theoretically, the more size you can have. But the wider you are to your risk level, then the less size you can have. But the R should be the same. So hopefully that makes sense.
to tie a bow on that, it's like, and what I think the room we're talking about is there's confusion. Like 1R is consistent, and your goal is you should have risk level figured out before you have entry figured out, and then your size, your 1R of size gets decided based off of the distance between entry and risk. It's not something you figure out once you're in the trade. I have 5,000 shares. Okay, now where's 1R of risk? Because what you're going to find out is that you're going to get stopped out a lot when stock ends up continuing to do what you wanted it to do. You have to choose risk level first. And the way I think about risk, I think we all do, but we just have our own opinions on it, is at what point on the chart can it not do what I want it to do anymore? Huddie would tell you that is way wider than I or Kyle probably would. But it seems like this person is way tighter than it should be. And an easy way to figure out if your risk is too tight is, am I getting stopped out a lot, and is it continuing to work without me while I've taken a full size loss? And even some people, if your risk is too wide, how often am I taking a full loss? If it's not often, I could probably afford to tighten it a bit.
Yeah. And with that wideness you referred to there, is that if your stop loss is too wide and you're actually winning a lot, but your risk reward is really bad, then your R might be too wide, or your stop loss might be too wide. Because if you're buying breakouts and making 1-to-1. You could be making 1-to-1 if you're selling too early on breakouts, but if you go back and review the actual breakout that happened, and turns out if you held another hour longer, you would have made 5-to-1, 6-to-1, 10-to-1. It's okay, then you're good. But if you're selling the top and your risk reward is 1-to-1, then your risk is too wide for sure. Or you just bought you chased a breakout big time. That could be the case too. So it's very scenario based. But that was a really good question, or a good clarification there, because that's an important concept there of the R. And another way to tell this is right, your R should always be the same, in the sense that if you lose 1R, it should end up being the same dollar value given your account size doesn't change much. So if all month long your account size is $10,000 and you're risking 1%, your 1R is $100. Where the tightness or wideness of your stop might change is that let's say you take 15 different losers. But one loser is a 7% loss, the other loser is a 9% loss, the other loser is a 4.5% loss, but all of them are still $100 in losses. That's totally fine. That's just you adjusting your risk level based on where you think the best risk level is. But like Dom said, if your risk level is too tight and you're losing, your 1R is a 1% loss, a 0.5% loss, a 2% loss, and you're not scalping, you're actually trying to trade these breakouts, chances are the breakouts are not giving you tight risk like that. Right? Especially in small caps where things are volatile. I'm rarely buying a breakout and I have 1% risk in terms of I literally buy it at $1 and my risk is 99 cents. That just doesn't happen, So that's another thing to consider and think about.
Yeah, I think what I'm seeing is people getting in with whatever size they want and then finding a risk level. And you don't want to be pigeonholed to risk a level that doesn't make sense, just because then you're just losing to lose. And you're just trying to get lucky, and it's always risk then entry, then size. Like size doesn't come first.
Yeah. Yeah, great point. I lost my train of thought here. Where is my in the chat? Matt says, yeah, imagine you were. Oh, but imagine if you were long CITD 50 cents and had to take one quick pee.
Could you imagine? That would be so
It's
depressing.
an expensive bathroom break. I mean, I've heard stories of expensive bathroom breaks on both ends where you missed. Yeah, I mean, more times than not, it's the expensive loss from a bathroom break. But that is a very interesting point, Matt, that it would be an extremely expensive bathroom break on the other end, which is you missed on a massive profit because you weren't looking. Because no one sets profit stops. Like you can save yourself money and go to the bathroom by setting a stop loss in most cases. But man, having a profit order that you just didn't set. Though I will say though, there was one time I did set sells on a stock and I did make a lot of money not looking and in my sleep. It was back in summer 2024. It was back when Roaring Kitty came back after stream. So like he was famous in COVID. Sent GME to like 600 or whatever it was, something ridiculous. 2024, he comes back. This GME goes from 15 to like 60. I think on the second day he came back, I longed it in the 20s or 30s. And then I put sell orders overnight at like 45, 50, 55, 60. So that if in the event that it did go there pre-market and I wasn't awake yet, I would fill. And I actually did fill. That was pretty fun. So I actually made money on my sleep there without looking. But that's again, I had orders already sitting there. So unless you were an animal and somehow thought CIIT was going to go to $20 in the next second, and before you go to the bathroom, you just happen to put sells at $15, then I think that's the only way you would have caught that one. All right, a couple more questions here. We are at the hour. We'll do like two more. Again, if you didn't get, that's a very active chat today, guys. Amazing.
I know, right?
Tons. I mean, I'm looking at the chat. I feel like I'm not even halfway through the scrolling. So apologies if we didn't get your question. But again, feel free to join the room. We can always answer questions there, or Good Morning NASDAQ, or webinars. So a lot of resources we want to.
Come join us in a webinar. We'll be there tomorrow. What market open tomorrow, Hudster?
I won't be there.
You won't?
You're on the schedule.
How's he gonna be there? Tom just shows up by himself. He's like, wait.
Will he be there?
Yeah,
Will he? I don't know.
He'll be there. Yeah.
Well, if he's at Good Morning NASDAQ, I'll be quick. I'll quick to know because we transition right into it.
Yeah.
I love these new overnight quotes. SafeX is already at 57, Huddie.
Really?
Yeah.
Really? Oh snap!
Really?
Look at
Guys,
you
we have
go.
kind of a lot of shares. I actually added some in the after hours.
Dang.
So you have
some
40,
Little
exactly
dirty dog.
40.
No, I have 46,000.
Dang.
So if it
dirty
goes
dog.
to, if this one goes to 22, you'll make like $1 million.
Like $1 million. maybe 4
That's
million,
the story I
don't know.
want to hear. I want to know someone who's maybe not public on Twitter who had 50,000 shares, just an animal, and sold it at like
How do you
15.
check the 24-hour quotes?
It
You
wasn't.
just look at your market makers.
Oh yeah, and yes, just look at your market makers. Moon and boat.
I don't know. Mine says 55. I don't see no 57.
You missed it. It was there. No, it's not.
Yeah, no, it's not.
No. Someone
Dang.
sold?
That's cool.
I don't know. I don't get how it works, but when the oils were moving last week, I was addicted to looking, and it was just didn't mean anything.
You're addicted to watching.
Okay.
All right, a couple more questions. How do we scale out of a winning trade? For me, it feels like someone is holding a knife to me. What? Forcing me not
what?
to exit until I take my profits. Many times the stock's quick
Forcing
to squeeze.
me not to exit until my take.
Yeah, what? That sounds like just, it's not a knife, it's
I
greed.
love that. I would much rather have that problem than the other one that people have, which is like they have a knife to them to get out of their position the second they buy it.
Yeah, true. They're too early to, they start having finger or a profit taking itching and they just can't stop covering or selling. But then he says, even though my profit target is still far away. So it sounds like he's dealing with a little of both. What an analogy. Knife to me. I do two things. I have a profit target that I'm fairly confident on, not convicted in the sense that I'm going to hold no matter what. For example, TPET. I was shorting TPET. I was short from $2. I said I thought this could go to $1. As time went on, and as I gathered more information, I said, you know what? I don't think this gets to $1 in the time frame I want it to. and I covered today at 150. Thank God, because it's now 20 cents higher, and so it saved me some giving back some unrealized gains. So you can be flexible with that profit target, but in general, if the trade is working in your favor, then you are scaling out either as it heads to the profit target and or have a piece that maybe can go beyond your profit target. So that, and you can put like a trailing stop in. And again, it's too different. It's so case by case. The setup matters, the stock matters, the short or long matters, the bias matters, right? So it's, I don't know. What I will say is on the short side, I'm usually scaling out in fourths or fifths, and I'm usually doing it in a sense of how much am I going to give back. It's dynamic risk reward. So like the reason why I covered TPET, or one of the reasons why I covered TPET at 150 is because I thought to myself, if this comes back to $2, will I be pissed? Given that it's halfway there to my reward. Absolutely. You know what I mean? Because one, I thought $1 was going to take longer than I thought to get there. But two, okay, I'm short at 2, it's at 150, and I wanted to go to 1. I'm halfway to my reward. Am I really willing to try to hold on longer for another unit of reward to give back what I'm currently up? Absolutely not, right? So you may have your price target in mind, but if you're up enough, and again, this is hard to say because you don't want to be trading your P&L, especially if you're a beginner. You might be up $100 and think you're up a lot when really you could have been up $500 or $1,000, whatever it may be. But I'm scaling out to the point where I can stay comfortable in that trade. Now, granted, with the oil sector being hot right now, is why I was worried that was going to happen. So I covered TPET for that fear. But if that wasn't a factor and I was just nervous about TPET coming back on me at 2, even though there was no rhyme or reason, yeah, just cover half. Like I'm halfway to my profit, lock in half to stay patient with the other half. That way I'm not giving back as much as I'm actually giving back. I'm only giving back half, and I've actually locked in half because I'm halfway there to my actual profit or target of $1, right? So there's that dynamic risk reward that just because you started the trade with one risk reward, but as the trade works, your risk reward technically changes. Like if you're 1 penny away from locking your profits and you haven't sold anything yet, so let's say you're along a breakout at 5 and you think you can go to 7 and you don't sell at 6.99 because you want to wait for 7, I think that's kind of silly. Because God forbid the stock goes all the way back. You gave back, it's almost an inverse risk reward at that point. You're giving back almost all your reward for like ton of risk versus just selling 1 penny lower than what you thought. So I don't know, I'm rambling on, but hopefully that helps. Hopefully you get there. It's a lot of experience, but please don't think it's like you're a knife to you. It doesn't have to be that serious.
An easy way to just, for those people out there who stress about exits, just on a piece of paper, on a document, every trade you take, just have a specific plan. For most of my career, I've had pretty strict targets, and I kind of live or die by them because it's easier than whatever my brain wants to do every minute. And just know, where's my knife to my throat target, like you already have right now, based off the size that you have, and then just back test after like a month of just going through your plans of your performance of however you're going to trade going forward. And look at, if I had waited to my profit target, how often would have been hit, and would I have done better than I'm doing right now? And just prove if having the knife to you is better.
All right, we're gonna stop it there. I know I said one more question, but we're 7 minutes over. We're rambling on. But very good questions, guys. Thank you so much for tuning in and participating. Again, feel free to save the questions for next week. Save it for tomorrow morning. Good morning, Nasdaq. Save it and join in the chat room or join the webinar tomorrow. That's what the webinars are for, to get more in detail answers to the questions, along with charts and live trading. So yeah, thanks so much, everybody. Have a great, lovely rest of your Wednesday night, and we will catch you guys next time.